Hello folks, this is Adam Zuercher with Hixon Zuercher Capital Management, and today I will be bringing you our May 2015 economic update, where I will talk about major headlines from the economy during the month of April and how that might affect you as investors. Well, first quarter earnings season has kicked off in April, and U.S. firms have reported on their performance for the first 3 months of the year. So far the news is a bit mixed. We've had 280 of the S&P 500 firms report already, and overall profits have been up a respectable 9.1%. However, top-line revenue was flat, and many firms have missed their revenue targets. So far, results have indicated that U.S. firms have struggled with weak demand, and that their earnings, the growth in earnings have come from controlling costs rather than from organic growth. The revenue misses were especially stark among firms that depend on global sales. The strong U.S. dollar has hurt conversion rates into dollars and has made it more expensive to buy U.S. goods. Volatile oil prices and soft global growth has also affected many companies. On the positive side, however, firms have still been able to squeeze out some respectable profits. We also got our first look at Q1 economic growth. The first estimate of gross domestic product has come in basically at a flat 0.2%. Though this early report is based off of incomplete data, we can see that exports have plunged, businesses have slashed their investments, and consumers have held onto their wallets and been a little tighter with their money. How much of this weakness will continue into the second quarter? That's the big question that the economists will have to answer as we progress into the second quarter. So far, what we do know is that consumer spending has edged upward in March, and wages have increased in the first quarter, giving Americans more money to spend. Hopefully, a warmer spring and summer will give consumer spending and business activity a boost. Also last month, the Federal Reserve Open Market Committee had a meeting that was also a major event and headline. Investors were watching to see if the Fed gave any indication as to when they might start to increase future interest rates. Instead, what the Fed did was they basically completely removed all calendar references from their official statements, and they've indicated that a mid-June rise in rates is very unlikely. So the takeaway here is that the Fed is very sensitive to the economy and to the financial markets, and they're not quite ready to commit to raising rates just yet. So this is good news for investors, as it shows that the Fed is being very cautious, and we don't expect the Fed to make any sudden movements. In the weeks ahead, investors will be thinking hard about whether the first quarter, the weakness that we had there, will continue. It's our belief that some of that weakness is attributed to seasonal weather patterns, and as weather has warmed up a bit, consumer spending and business activity has picked up a bit. However, we do see that currency issues and oil price volatility will probably be with us for a little while yet. Well, that's it for this month's economic update. As always, we will keep a close eye on the economy, and if circumstances warrant a change in client investment strategies, we will certainly take action. Nothing we talk about here is an investment recommendation, so if you have specific questions about your situation or would just like to sit down with us for a review of your situation, please give us a call at 419-425-2400. Well, this is Adam Zuercher signing off for the May 2015 Economic Update.